Well, we had a down week for the market this week. Nothing to be unexpected. We've had so many weeks where it's been up. So this is the correction we've been waiting for and want to use as best you can, because I do think we're going to have another big push at the end of the year, beginning of next year. So this is the correction we're going to use to get out of any short positions and ease out of our more defensive positions and into a more aggressive stance. This week we had some mixed economic numbers. The Case-Shiller report on the 20 cities' housing sales and prices, that was up. Prices were up 1.6%. Sales were up 1.6%. Prices up 5.9% year to date. So that was good. Consumer confidence rose from 60 to 70, which was a little bit better than expected. New home sales, that report wasn't as good as they hoped because it was pretty flat for as far as number of new home sales, but the prices went up 10%, which was really a shocker. So that report wasn't as good, and other than the fact that the prices rose. Durable goods order fell 13%. That was pretty bad. Now, if you look at the report, almost all of it, or quite a bit of it, was in the transportation area, especially airplanes. Airplanes are always a problem. One month you have huge sales, another month you don't. So you got to kind of weed that out and find out, well, what was the core durable goods? And the core was much better. It was up just a fraction on the core durable goods report. Still not a very good report. And this has been several months where it's been down. So that's not a good thing. Second quarter GDP had the final revision this week, down to 1.3%. Now we're going to get the third quarter's first report next week, but this is the final revision of the second quarter. That's pretty low, so that's not a good thing. And August spending this morning was up 0.5%. And you would think, and that was the second pretty big month in a row. Say, hey, good, consumer spending is up. However, if you looked at it, most of it was in gasoline. So you take the gasoline out, you take that out, and let's see, what was it? 0.1% consumer spending. And so that wasn't very good. Inflation's still not a problem. The PCE report is which is what the Fed looks at quite closely to see if there's inflation. And you would think they would look at the CPI and the PPI, Consumer Price Index, the Producer Price Index. Well, they look at it, but it's the PCE report that they really look at, and it was only up 0.1%, and PCE is only up 1.5% for the last year over year. So they're not worried about inflation yet. That's not going to be an issue, and so that's one of the reasons why they keep pumping in with QE3 and so on and so forth. So what we're going to see is we're going to see some softness, and I think that's great. I want to see it. As a client, we want to see it because we've been defensive. We've been in the market, but with defensive positions. And I'm talking about stocks like Coca-Cola and Procter & Gamble, things that are big blue chips that still do pretty well even in the down market. We're going to ease out of those, and we're going to ease out of our few shorts in the stock program and go long. Of course, in our income program, we're always defensive. And those who are in the mutual fund program have already seen some changes, small changes, several buys in more aggressive parts of the market. And that's what we're doing. We'll probably continue to do that for the next few weeks. Hopefully the correction will peter out, and it will. I'm pretty confident it will peter out here in the next few weeks. And we'll probably get back on. I have a feeling we're going to start seeing better economic numbers in the not too distant future. Not great economic numbers. I'm not expecting that, just better. And so we have to be ready for that. I think the market's going to react to it.
The Invest Talk Update is a monthly briefing that gives you a snapshot of the past month's market, along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's Invest Talk talking points, plus news of upcoming Invest Talk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.